What's going on, everyone? We're going to take a look at the SPY, which is the S&P 500 ETF. What I kind of want to quickly point out today, good job for the bulls. A little bit of a dead cat bounce that we got. The SPY is currently up about 1 percentage point and $3.83 on today's session. One thing that is bullish is we did just reclaim, and if it stands, the 10-day moving average. So that's very bullish for a shorter term standpoint. Normally, whoever is controlling the 5 and the 10-day moving average generally has control over the next day's sentiment. Now, we still have about 25 minutes left before the close here, but assuming that the SPY closes over the 10-day moving average and it confirms today's highs of a price of around $399.55, we do have room into 404. That is going to be the next supply zone that I will be looking at on the SPY to kind of take profits. Now, if you can kind of see going back 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days, 11 days, 12 days, pretty much we've been in a channel for almost the last 3 weeks, and realistically the last 2 weeks we've been going sideways. Okay, so the last 2 weeks we've been going sideways. Also understand that it's going to be a long holiday weekend. A lot of people are going to be clocking out for the week, meaning your institutional traders, your hedge fund traders, your big money traders, your big options players are going to be escaping for the weekend and kind of just letting their hair down and enjoying themselves this weekend. So expect a little bit of moves. Potentially could dry up. Volume has been a little bit lower this week just due to that fact. But if we kind of just look at where we stand right now, if we take out 399 and some change, we've got room to 404. That's going to be the next big supply zone. So easy setup for tomorrow. If the SPY takes out today's highs, we're going to get long. We understand that we have resistance at 404. We want to be taking profits into 404. We don't want to just hold thinking that we caught the bottom here and we're going all the way back up to all-time highs. We're still in a downtrend. We're still in a bear market. You know, a lot of stocks are down 30, 40, 50, 60, 70% even. You know, so nothing has really changed on a macro picture. It's just for the short term, things are a little bit more bullish on the shorter term. Now, when we do get to 404, that's another discussion for another day. Obviously, any close over 404.35 has room to 414. That's going to be the big multi-day, possibly multi-week dead cat bounce. That's going to provide a ton of trading opportunities to the long side. Here's what I do want to note. If we do gap up tomorrow, anywhere in the middle of this range or at the top of this range, closer to 400, 401, something in that area, and we get rejected off the open, right, within the first 1 to 2 hours, and we can't take out those highs, the market will roll over. Now, here's what I want you to kind of understand. If we do lose the 10-day moving average, which is around 396, and the 5-day moving average, which is 393.68, that's a no-brainer short position. Grab some puts through 393.68, ride this back down either for a test of one of these more recent lows of 387, maybe even 385. That's an easy short position. And obviously, if we get below that, we do have the final test here at 380, and anything below 380 is a macro flush point. But as a day trader and as a scalper, we only need to be concerned about what the market is doing today, what the market is doing tomorrow. We do not care about what's going on next week or next year or next quarter. We want to know what's going on right now, right in front of our faces. And realistically, that's over 399.55. We've got some room to the upside. Obviously, anything below the 5-day moving average of 393, we've got some downside. I hope this video helps. Make sure to join my Discord. That link is down in the description box below. Also, make sure to give me a subscribe and a thumbs up. I would highly appreciate that, and I'll see you guys all at the next video.